Alright guys, just making sure I didn't miss anything. I had a little cat nap when I go home from work, just to a little bit tired. I'm waiting up for this North Korean speech last night. Jesus Christ, it's a little bit late. I actually went to bed before the announcement, that he thought that the US had declared war on them and what they were going to do about it, yada yada. The dollar yen fell, but the reactions and the follow-through in selling from North Korean news has been very limited, and you shouldn't be too worried here, I suspect, on the downside from dollar yen, unless stocks start to fall. And when stocks aren't falling, you can't be selling dollar yen generally. What you are seeing is a lot of the US dollar strength that we talked about yesterday is potentially this week happening. So we were doing the update, we were talking about the chances of the euro breaking through the previous low and then continuing lower, dragging down the pound. There's political risk here, and an opening for the US dollar to break above its dollar index high. So this level was broken pretty convincingly during the start of Europe today, and that's really where you're seeing the US dollar strength come from. It's across the board, with the exception of dollar yen, which is struggling to regain its foothold as some of the yen crosses are selling off. Now, we talked about this potential yesterday as well, that dollar yen would be struggling if euro yen and pound yen. That was broadly speaking, right? That's broadly speaking, these dollar yen can get pulled down by euro yen and pound yen. The same way when dollar yen rallies, it can drag up pound yen and euro yen. But what we've seen here is half because of the big sell-off in the majors. The other half is because of North Korea fears. Latest news on that, and I was just reading up to make sure I hadn't missed anything in the last hour or so. Looks like China's come out saying they want to sort of stop North Korea's nuclear and missile program from developing any further. That's basically get them back into talks, which is something that the current leader of Korea hasn't really been involved in, which is that six-party talks. Which in the rumors mill back in the day, like in last month, was Switzerland be the place. That's where Kim did his schooling, and a bit of a traditional diplomacy and non-military situation in Switzerland. This is where they're sort of the peacekeepers in Europe, and they could definitely be sort of the negotiators, or the place to hold negotiations, if that was to be one road it goes down, which is probably how it's going to end, right? It doesn't end in war, it ends in some sort of peace talks, and similar to Iran, tried to re-engage and put pressure on in that regard. But the rhetoric is very highly charged at the moment between Trump and Kim, and Trump is not exactly a politician and a diplomat, so this is the danger. Pentagon was talking about its military options that it has, drawing up as well, if it needs. All that doesn't help, right? It just stokes a bit more fear, paranoia in North Korea, which is, has to be on high alert, right? This is, the game they're playing. For them, it's real. So we'll see exactly how they play and continue to play going forward. If they continue to test or do anything silly, then perhaps there will be some sort of military conflict. That's the danger here if you don't get talks relatively soon. But yeah, a lot of the ball is in China's court. Without China's support, North Korea is sort of stuffed. So if China says let's sit down and talk, they might actually listen to that. And you never know, the sanctions might be having the desired effect over there, in terms of not being able to get day-to-day goods and just starvation for the people, which is already supposed to be really terrible. It's really hard to get information out of North Korea, but it's supposedly a really terrible situation there. But this US dollar sell-off here, so buying, is pretty real, and it can continue. Where we're looking at the key levels is the 117.20. That level is a previous breakout level, and that could be the first sort of level I would be looking at to buy. Broadly speaking, I want to buy the euro, right? I want to buy the euro in anticipation of October's ECB event, where the yields should start to rise again, and the market looks forward to potential euro recovery. And the pound, with the chance of the Bank of England raising rates in November, should be well supported on any dip as well. So I think this is more of a trying to find a relief rally in the US, but trying to find that ceiling in any sort of range trading. All right, so where's the ceiling for the dollar yen? 114. Where's the support? Should be between 117 and 116 for the euro. Where's the support for the pound? Between 134 and 133 should be found as well. And that's if that is the thesis going forward, that this is US dollar is not based on too much. It's just, you know, we've found the bottom in the US dollar. Now we're going to find, you know, where the upper limit of the strength is, maybe towards dollar index 90, 94 to 95 could be the level that the US dollar rally stalls, and that to me seems like an appropriate place, and that's where I'll be looking to re-engage sort of long euros as the main trade, but to potentially also long Aussies if that gets down between 78.50 and 77.50. Very strong support should be found there. And the sustainability of a US dollar rally has got to be in question, especially if Trump can't get past any of his plans, including tax plan, which he has a big speech supposedly tomorrow coming out. We'll see how the market receives that. But his healthcare plan, by all accounts, is dead, because Republicans needed to vote for that, have not done so. Therefore, he has no chance of getting it passed, as the Democrats won't support it. So that's not a good sign for his agenda. But so far, and surprisingly, well, maybe not surprisingly if you're bullish on US stocks, the US stocks have not been reacting to any of that, which makes it really difficult to be negative on ultra negative on dollar yen and ultra negative on euro yen or pound yen, which are also, you know, enjoying nice pullbacks here towards support levels, actually coming up soon here for the euro yen. And the pound yen, ideally you'd like to buy towards 148 if you could get down there, but you know, it's under pressure too. So we'll see how low we can go here. But broadly speaking, you know, as stocks will hold up, then you should be looking to buy these pairs on the dip. As Japanese elections and the economic stimulus package is going to continue to put pressure on the yen going forward, and you think of this as a short-term pullback, a short-term correction in an uptrend, and until proven otherwise, that should be the going assumption. So it's actually good when things develop as you expect, because that gives you a little bit of anchoring, right? A little bit of perspective on what you think is happening. And now, especially if they do find support relatively soon, both pound yen and dollar yen and euro yen, and stocks remain strong, then it gives you a little bit of well, whenever you go to buy the euro, you can go buy euro yen at the same time. It gives you a little bit of confidence in what is happening. But you still need to see a nice little bit of price action off these supports relatively soon, right? You don't want to see the market just bouncing along here without breaking, or just, you know, really sticky to that level. You actually want to see some sort of V-shaped, nice buying price action to help you buy. Yeah, it's like yeah, scalper. Like, what do we use the word should? I don't know. It's like you have a thesis that the Aussie dollar is in an uptrend, okay, and it's broken key levels, and you know, the key breakout level, if it's tested, should hold if we are in an uptrend, okay. If that level breaks, then we are potentially into something else. All right, so the should part is what should happen if the thesis you have of what's happening is working. And sort of if your model of what's happening in the market breaks down, to me this is just a very simple US dollar pushback after heavy selling for six or so months, right? This is not, you know, something huge changed. I mean, you had a little bit of the door opening for the rate hike in December, but that's not new news. That's always been on the cards. It's just the market is broken back above some previous highs, and now we're kicking on. The euro is breaking below some previous lows and is kicking on. But has the fundamental outlook changed? Not so much. Therefore, your thesis and your direction of where you're looking for placing trades shouldn't change. and you're looking for the market to find support to support that view, right? Now, if the market doesn't find support and we break down and we're at 115, something's up, right? Something's up. Either the ECB's delaying taper, which delays the whole euro rally in October, or US is punching along with strong US data, Trump getting a tax plan passed, inflation starting to pick up. Something which opens the door to a more sustained US dollar rally. Things don't happen for no reason, right? Things don't, it's not like you should just wait and see what happens, and anything can happen, without any sort of backing fundamentally. In the 10 years I've been trading, that's just not how it works. There has to be a story that makes sense if you want to get the big money involved going in a new direction, right? And so, and the sort of thesis that bulls are in control of the stock market is that you don't want to go against that. You don't want to sell here just because it's overbought, technically, right? And just needs to come down. You wait for the price action to dictate that something else changed before going in there, most likely, right? I know a lot of technical traders who are selling stocks, and they've been hurt, right? They're hurting right now because it just, for them, it doesn't make sense how it continues to go up. And look, for me, fundamentally, it doesn't really make sense either, right? But it's not like I just, wildly, sell stocks because it should go down or risk aversion or something bad's going to happen. Trump can't get anything through. Trump not getting anything through is potential cause of a pullback. But until you see the price action to back it up, you don't trade off it, right? So really, I think fundamentals is just one part. You have your view, and it gives you confidence. It's like a technical system almost, right? And then you have the price action and technicals to overlap on it, and you see what happens at key levels. And key level trading, if you're trading off the daily, is very important, I believe. Yeah, you can make sort of big predictions based upon that. So where's the big prediction in the euro? Back when it broke previous highs, was it's going up? Back when it broke, here on these highs, that the Aussie's going up. But there was fundamental reasons to be in here, mostly US dollar weakness and euro strength. Okay, and so when they line up, it's perfect. But yeah, I'm definitely open to the potential for a multi-month US dollar rally into the end of the year. It is potential, right? But it's not my current view. So yeah, you said you're right. The language is maybe not completely accurate. You should want to use, but I'm not going to put a disclaimer every time I say the word should. According to my view, hold here in an uptrend. I just say should, and it's just my view. But it allows me to be bearish on the euro, just because of the price action, not because I, short term, not because I'm actually bearish in the euro. I just, acknowledge what's happening right now. Yeah. But you see that I haven't actually sold the euro, right, or sold the pound, or sold the Aussie, right, because it's not really part of my long-term view. Now, buying dollar yen is, and I was long dollar yen, and that would have been higher given what's happened with the US dollar if there wasn't North Korea happening. And even buying dollar yen right now is not a bad trade, and so I'll probably get back in. And the good thing about when you have dips like this, you can put your stop just below the previous lows, okay? Because it looks like the market is ignoring North Korea again, and US dollar strength is pretty real, and so you can hop back into a long dollar yen trade with a relatively tight margin. Yeah, and that's part of trading as well. You need to know where to put your stop, and if you're right, where's the target? The target is 114, right? Because that's the resistance that we've looked at before. If you're wrong, where's your stop? 111.30, and so your risk reward is something like 5 to 1. Yeah, I mean, yeah, look, in terms of this style of trading, how many trades do you make? Not many. You're right, Jules. Clear signals are not that often. So as a group, do we overtrade? Almost definitely, right? Now, why do we do that? It's because we sit down and we want to justify what we're doing, right? We're sitting down and we're trading every night, and if we don't have a trade open, what are we doing? But waiting is probably the most important skill to develop as a trader. and then patience when you're in the trade too. So the harder part about this trade is not so much getting in. The hard part is holding it to 114 with whatever Trump and Kim do in the meantime, right? Because that could be a little bit of an adventure there. But it looks pretty clear with the dollar index anyway that we are going higher. So you can buy a straight dollar index too as a trade on that break. That's fine. I'm sure many technical traders did that. Right, but I wasn't there at the time at the market. All right, let's have a look at some of the data, see what else banks are thinking about this breakout in the US dollar and whether they think it's going to sustain or not. I haven't seen the European reports yet, so this is fresh for me too. Settle down, GJ. Now I don't know if you're taking the piss, man. Alright, so the game that they're saying here is that the Euro USD is being sold in the wake of German elections, blah blah blah, but eventually closing, putting pressure on sell-off in Euro Yen, Euro Swiss. Okay, well, yeah. I mean, this is so much bigger than this for the Euro because the Euro in general in the last 3 months, when North Korea's done something negative, has pushed up as the dollar yen has sold off, the Euro's been higher, but not at this time. Looks like the Euro bearishness, and that's pretty interesting actually, that the Euro couldn't rally even with that news out there, because Eurozone is so far away from that conflict that it's a natural sort of safe haven, new safe haven for this trade, and that trade was working for a while. Any North Korea bluster was a long Euro event, but probably not just in the timing of this. And Euro Yen and Euro Swiss you probably haven't been watching too much of, because it's not the most traded pair post S&P, but it broke that 110 level and had that huge rally up, and it was overbought as well, so that also is an important consideration. The Euro Yen, Euro Swiss pullback dominating Euro flows is only possible because of the rally you've had in Euro Yen and Euro Swiss. If we tried to pull the same stunt, here, it just wouldn't work, right? The market hasn't moved high enough and been extended enough that those positions have to be pulled back. But in the current market, when they're so extended, yeah, of course, they can definitely add to selling pressure. You're seeing that same selling pressure come from the Aussie yen as well. Aussie yen's an important part of the Aussie, the whole Aussie dollar complex. Aussie dollar, I was actually looking at this when it failed at 90, and if you trade Aussie yen, 90 is a level from way back that's so important, and it used to bounce off it, it just jumped off it. That level's been in play for ages. The reversal was a little bit ominous, and that's now a big part of Aussie dollar pullback here. This pullback in Aussie yen on that risk off didn't help at all. Okay, but same thing, if the dollar yen can turn, then all of a sudden the Euro yen, pound yen buying and Aussie yen buying would be able to support the majors. Definitely with pound, you've noticed in the past when pound and the dollar yen move in the same direction, it's very dangerous. It's a very fast moving pair. But yeah, right now we've got a little bit of a disjointness going on, right? About who's in control. £1, 150, I think pound is bouncing off right now. It's not a bad level. It seems to me a little early in the sell-off to get involved again, given the size of the move up. But it's it is behaving itself here. Straight off it. Okay. Well, it's potentially going to bounce and hold here, but it's not my sort of trade. It's too dangerous, right? I think you get taken out pretty quickly if the market continues lower in the pound. Let's get back. I know some of you guys watch this and we're like, is he making this up? Is it this relationship that he's talking about made up? Yeah, look, it's made up in my mind. Talking with a lot of emphasis like it's real. I haven't done any quantitative study on it, right? I don't, you know, but it's predictable and it's repeatable. And if you've watched me trade for a long time, it's the same reason I use you know, we talked about it yesterday before it happened. So if you want to watch yesterday's YouTube, we talked about euro yen, pound yen potentially being important for the dollar yen and how that works in the current stretch valuations of pound yen and euro yen. And on the way up from 108, if we went back about a month ago, when dollar yen moved, that was a way of, you could see the support coming through for the Aussie dollar and the pound via the pound yen and Aussie yen, especially during the Asian session at the start of the Japanese Open. That's when you can see big correlations between Aussie yen, pound yen, and pound and Aussie movement. Like, it is the main reason why sometimes those pairs move 20-30 pips, is because of the Aussie yen buying. Because that's still the biggest sort of center for FX, right? And when Tokyo opens, that's when big flows come through. That will just overwhelm whatever you're looking at on a chart. Tested 1150 a few times, no follow through. Looks like we need to break below 1110, 20. Expect further interest at 1250. Yeah, 1250 will be interesting up here. If we can get past 112, which looks like it's on the cards right now, 112.50 will be an interesting battle. Let's quickly look at the 10-year yields. Ooh, they are not bouncing at all. That is suspect for this trade. Yeah, I don't want to be in that trade. If that chart looked a little bit different, like it turned up here, then I'd be continuing on in long dollar yen. But you know, yields are king. Bonds are king these days, even though they're not making the front page or Forex Live or anything like that. So rather than, you know, it can still go up, but rather than fight what potentially might happen next, I'm not into that trade. I think the market ignores Trump a lot, but it doesn't mean that he can get away with anything, Jenny. Trump tomorrow, when he speaks about tax plan, how he comes across is going to be very important for stocks. You know, the market will be watching very closely how he, you know, what he wants and, you know, how he expects to pay for it. More importantly, if it's just pie in the sky stuff, then maybe there's been negative reaction. So certain things, yeah, they ignore him because he's a bit, you know, Trump. But some things are very, you know, important for the stock market rally anyway. And they definitely pay attention to what he says about the Fed, you know, because Yellen's up for re-election, right? And if he doesn't like Yellen anymore for some reason, whatever the reason is, and chose someone else, whoever he chooses is a big risk to the market, right? And that person has to be vetted by the market. So yeah, that conversation, that topic, when it comes up next, is really quite important. Saw that move below in euro pound to fresh lows and then jump back above. That's a dangerous sign here in the pound yen. If you get breaks and then the rebound like that, that's sort of a false break, and that can look damaging if this candle ends up higher. Right, that's gonna cement a lot of people's views that the 87.50, 87.40 levels held, and I'm sure Andrew. I haven't watched Andrew's stream today or later tonight, but I'm sure he will talk about Euro Pound because he trades that a lot. But this you know, sort of breakdown level has been talked about in the past, and if it bounces off this and we get a little reversal candle here, you're going to get a little bit more fear in the market for sure about being short. Like as a bear, you don't want to see that. You definitely don't want to see that. It's probably the last thing you want to see today, if you're long term anyway. This puts up into this could get a little bit more dangerous market reverses. How's that being pulled off? Pound just reversing down. I couldn't find any news for the pound reversal in the last hour. It's pretty sharp though. I mean, it didn't need a reason, it just follows the euro down, but month-end demand, oh god, that again. Supposedly every month the euro pound gets support because of the way that the European Union and the UK are related. I've never really looked into that too much, about if that's real or not, but every month you hear about it. And sometimes that is done a couple of days early. I suspect it's just more the pound has failed and it's a little rally at the start of Europe and we're just going lower, making new lows. But yeah, both the pound and the euro have very rosy outlooks going forward, so let's not get too ultra negative here on this play. But for the euro pound sellers, you should be watching and paying attention what happens next. Probably the next 2 days is critical for this pair. There's a lot of big name speakers coming up this week as well. Yellen's speaking tonight and she's speaking about inflation. Now that could be extremely important for December's rate hike chances, because that is the go-to topic, right? That is the topic that everyone cares about, the Fed cares about. Now the Kiwis are probably the weakest in the market at the moment. Now why is this happening? There's a strong chance, much stronger than I thought. I was talking to some Kiwi traders today, and the reality on the ground is there's a much stronger chance that Labour gets into power. The right-wing national party, like nationalistic party over there, New Zealand First, is run by a guy who was both in the Labour Party and in the Nationals. So this guy, this kingmaker, is an old parliamentarian who's been in both of the major parties, and he's a bit of a maverick and a little bit, you know, looking for the limelight, and he won't get that in a traditional coalition with a more normal, what you'd think would be the natural fit with the National Party, and he may get that with the Greens and Labour, and that won't be known for a couple of weeks. So, you know, the Kiwi has potential here to become really weak and fall off, you know, continue to be under pressure. Yeah, and it's you know, the potential here for the downside, you know, it could go to 70 cents in 2 weeks, you know, because the Kiwi is it's pretty easy to push around. It's not the most liquid currency, and so it is a favorite of hedge funds to be pushed through key levels and get oversold. It gets oversold and overbought all the time, and it's it could easily keep on going. These sort of sell-offs that you get are such big sell-offs Now, these moves are so much bigger than we've got already, and it's not a big ask to get down to 70 cents on this sort of story, which will continue for so long. Especially if he goes with Labour. I mean, if he goes with Labour, it's all bets off, right? This is that changes the dynamic of the RBNZ dramatically. Dollar CAD is also enjoying its first reversal of note for a while. You'd think with oil being so strong that it won't get too far. There is a big speech coming as well though. So Paulez, if he joins the other Bank of Canada members in being concerned about the recent dollar CAD or CAD rally and the fact that that can inflect inflation and the economy, then that caution, if it comes through in Paulez's speech, is going to be fuel for the dollar CAD reversal towards 125, regardless of how oil trades. Yeah, the Bank of Canada is the reason for the dollar CAD falling 1,500 pips. It's oil's just a small little distraction. Chasing dollar strength on Fed or Trump is strategically unrewarding. This is a view that a lot of fundamental traders that I know have been putting to me as well. That the Fed rally from the FOMC meeting won't last that long, and Trump's tax plan is unlikely to get reviewed. So how is the US dollar going to get sustained rally? I think half of it is positioning, and so I think the size of the rally can be bigger. And I'm not going to be looking for US dollar weakness here. I still want to see a little bit of a bigger pullback, yeah, in the euro, a little bit of a bigger pullback in the Aussie before I want to get involved there. But yeah, I can understand that view, and this is half the reason why you shouldn't get too US dollar bullish, is because those two things are pretty much priced in now. The Fed raising rates in December is half, 70% or something, and you really can't trust Trump to get tax plan passed. It just doesn't seem like it'll be easy at all. So they're looking for a broader correction towards 116. And pretty much everyone thinks of this euro reversal as a correction rather than anything else. Yeah, I haven't seen anyone suspect that this is going to go down too far. And half the reason that we're buying dollar yen is or yen, we want to buy yen crosses, is because of this yen, this snap election for October 22, which isn't that far away. And the fact that he's going to be chucking out the more Abenomics to continue to sort of get the votes, and spending more money, which is going to sort of jump in with the whole plan here, and BOJ keeping on the same path. This is this provides big support. If the North Korea and US tensions disappear, if talks begin, then you have to get ultra aggressive on either euro yen, pound yen, or dollar yen while stocks are strong. Then stocks are the only thing that will stop that. Otherwise, there's a big case to be made for a 1,000-point rally if North Korea and US tensions sort of simmer or they go into negotiations. So we will talk about that if that happens, if things get better in the geopolitical front. Yeah, but right now it seems to be pretty clear what is happening. Alright guys, if there's any pairs you want to be you want me to look at, like I said yesterday, just give me a little PM and we'll look at it. Almost everything's in play, but it seems to be a US dollar story, the main thing in the market right now. So we'll see how it plays out. Those levels that were talked about so far, hopefully we get them tested this week. Would make it a little bit easier for us to be playing that from the long side next week into the first week of the month where all the big data happens. Alright guys, we'll trade safe. If you're not in the market, then you might be late to the selling Euro party. If you're in the market to buy, then let's keep an eye on that 117.20 level as the first level. And then also let's tomorrow that we'll talk more about the tax speech tomorrow. But Yellen's speech tonight is pretty critical if you're trading dollar yen as well. So that's midway through the US session, actually towards the end of the US session, 2:45 AM my time. So way too late for me to get in. 2:45 AM. Alright, best of luck guys.